Hi everyone, welcome to Inventive Mind. Thank you for joining me today. I am an intellectual property and business law attorney. I do trademarks, copyrights, patent due diligence, agreements, licensing, corporations, benefit corps, LLCs, all of that. I work with entrepreneurs and startups and small businesses. So this channel is mostly for that and also some of my passion projects like mindfulness. So I bring in guests that could help kind of give you some information or guests that are doing like interesting things. So today I have one such guest, Brandon, who is actually an insurance broker for life science industry. But I think for anybody who's joining us, you might get some benefit out of just getting the information, even though this you may not be in life science. You could see how the insurance works. This is one of two videos that we are doing. So the first video we did, we talked about the indemnity clauses, how does that work in your contract. So I will link that video below this video in the description. But this one, we're gonna focus on like early stage companies to how the company is growing and when you, what kind of insurance and all of those kind of questions. Just keep in mind this is for informational purposes only. If you have specific questions, please go see a professional that works in that area, like with all my other videos. And I point out in this that his interviews in my channel are a little longer. They are about 30 to 45 minutes. While I have other videos which I call bite-sized videos. Those are startup strategies, deciphering some of these complicated topics, like what is the indemnification clause. My tongue is not moving today, so it's okay. We're gonna just keep going. Because everybody had their days.
It's Thursday. We're almost there.
Exactly. And whenever you're seeing this, just laugh along with us. So anyways, so here we are. Brandon, thank you for joining me on this. I know this is the second video we are doing, but because somebody might just kind of come across this one first, I would like you to kind of introduce yourself a little bit, what you do. Brandon, like I said, does do insurance. He have a bachelor's degree in finance and business from Virginia Military Academy?
Institute.
Oh,
Institute, yeah.
No.
Almost.
Almost.
They're all very similar.
The other video, I got that right. So,
got it perfect.
So here we go. This is what happened when you try to tape back to back. So thank you, Brandon, for joining me. And please introduce yourself.
Of course. Thank you again for having me. It's been a pleasure so far. And so, yeah, my name's Brendan Bach. I work with Marsh McLennan Agency. I believe in the first video, we had mentioned that it was formerly Barney, but is now MMA West. So I have been an insurance broker for 5.5 years now, focusing on the business insurance piece only and only the life science vertical. So, from startup all the way through, commercialization, IPO or M&A, that's kind of where we provide our expertise as an extension of your team and ultimately just a soundboard to, bounce ideas, questions, or any concerns that you have off. And, as I mentioned and made a joke, we don't have hourly billing. So you're allowed to ask me anything you want at any time. But yeah, that's the quick introduction.
Thank you. That's so great. And I know you had to kind of refer back to our other video for that inside joke on there. So with that, I think we also had a bunch of coffee. That's why I'm a little hyper, but I think energetic interviews are better than like somebody sitting there kind of being bored, kind of deciphering. So, so you know,
boring.
Exactly. So with that, let's talk about insurance. I mean, honestly, it's so funny because insurance is actually a very serious subject and we're not trying to make a light of it in that sense. But I do think it's really important for entrepreneurs and startup and small businesses to know your how to do insurance correctly, because that could be the break or make or break of your company. And having insurance can really be that solid foundation, and you need it. In a lot of cases. So that's why we are bringing this on. That's why I'm bringing this information to you in my channel. So with that, Brandon, kind of walk us through, because I know you have a really cool diagram that you have put together that you
Yeah.
have shown me. And I will just put that information below this video, by the way. And just to tell you how we connected, because we did share this on the last video, but for anybody who just joined, I connected with Brandon because one of my other colleagues who is an in-house attorney connected us. In-house meaning attorney who works for a corporation. They are called in-house attorneys. And when you're in-house, you actually work with a lot of different professionals. And she had worked closely with Brandon on some of the things that that company needed. And she was telling me how knowledgeable he is. And I think that's the key. You want to work with the knowledgeable professional in these kind of settings. And you don't need to know everything, but you need to know people who know that information. So this is why it's important to work with professionals in that kind of industry, whatever the industry you are at. But getting this information can help you to kind of figure that information out. Meaning, if you don't know what you don't know, then you can go seek it, right? So you need to know what you may not know, so you could kind of look for the information. So that's my philosophy. And with that, Brandon, please go ahead, share your...
Yeah, and maybe before I share it, because it is kind of a lot at once, and I don't want people to maybe lose their ears right when I share it. But and I'm going to be brief, and I hope I don't put any of you to sleep. I'll make it as interactive as possible and fun. But really, you purchase insurance for one of two reasons, and the initial reason contractual, and we spoke about that on the last video. But the contractual requirements are really to check the box, right? And so for you to initially need insurance, you're gonna approach a broker to check your boxes for you. And a lot of times, we're seen as more of a vendor, right? Produce a quote, get it as low as possible, and then provide it to you. You then purchase the quote, give the certificate to whomever is requesting it, and then you move forward. And then that relationship, there really isn't much, right? Well, as you continue to grow your company, and you have certain inflection points, you're going to need someone, as was mentioned, that really understands your language, your company, your direction, and your goal. And it's really an educating process that we go through, as well as just us being your in-house risk management team. Because when you're in early stage, micro cap, small cap, mid cap to large cap, sometimes the large cap companies don't even have in-house management teams. So there's no reason that you should be taking that on yourself, right? And that's why you have an insurance broker, and it shouldn't be just a vendor relationship. It should be a true partnership. So right here, I'm going to share my screen here. I'm going to have to pop it up after.
Brandon, also, I would like you to kind of share what does insurance brokers bring to the table with maybe, go through this and you could add in. Because I know that when I was in-house at one of the corporations I was at, our insurance, which is your former company, former to Marsh and McLennan, was Barney and Barney. They provided beyond benefits. So that covered a lot of different things for the employer. And so I would like to kind of give that aspect too, to share, so people who might be like very early, like starting a company, they know what's available.
Right. Well, maybe I'll just give the brief overview of our team and our expertise. So in UTC, we have an office of 500 individuals. And right now, of course, we're all working from home. But those 500 individuals can be split into two. And so one half of the house is the employee benefits. So anything from health, dental, vision, life, retirement, key person, obviously the 401k is part of the retirement, but those services. And then the other half of the house, which is 250, of course, is the business insurance, which is what I help lead, right? So within that half of the business insurance, we have siloed teams. And for instance, we have a construction team, we have a food and beverage team, and of course we have the life science practice. Our life science practice is comprised of 35 individuals, and all day, every day, all we do is life science, from people in a garage with an idea and a beaker and maybe a dog, all the way up to, multi-billion-dollar market cap publicly traded companies. So maybe going back to what you were saying is the Beyond Benefits program was initially, and I'm, it's such a tough time because there was recently they passed a law prohibiting small group benefit trust programs. But back when biotech in San Diego was really starting to grow like a wildfire, we put our heads together with David Hale, and we said, hey, how can we get a program that's going to help small employers that are planning to continue to grow, that are under 100 lives? How can we get them the benefit program of like an Illumina or a NuVasive, and how can we attract those individuals to come off those big companies and help run these small teams to grow them? So we decided to almost pool together companies that would essentially create a large buying power that we could approach one carrier, and this is on the benefit side, to obtain gold level benefits for cheaper pricing for these smaller companies. So we did that, and as I said, it's unfortunately been disbanded. Unless you're over 100 lives, then that program still exists for age-banded rates. However, we did just create a program because if we couldn't do that, we decided we'd have a light PEO is what we're calling it. It's called Fuse. You still, as the employer, own your employees, so you're not being pooled together by any means from an employee perspective, but you are getting some ancillary, the payroll as well as the benefits for small group, and then of course the workers' compensation is handled through us. I can go through that as well, but yes, so we're very much tailored toward life science, and we can provide anything from the benefits, from the key person, from the retirement perspective, all the way through, as I mentioned, kind of our side on the business liability. So if there's any questions across any piece, let me know. We even do personal insurance if needed. Is that okay? Is that a good overview?
Yeah, I think so. That's great. And I think I just wanted to get that out there because I want people to know what is available. And if they're thinking, okay, well, I have 50 employees at this point, I need to give them something, and then of course there's, California mandated things you must have for your employees. But then also there's benefits that you may want to add in, like you were saying, instead of them your employees, your star employees going and taking a job at a bigger company, if you want to retain them, you have to give them incentives. And but challenges, if you're a smaller company, it's hard to keep, like your budget is limited. So your buying power is limited. So that's where, sometimes you need to figure out how to work with the systems that are in place instead of having to go to something and trying to purchase every little thing. If you could come to like a place like what you were saying, where there is some, deals that you could, like Fuse program you mentioned.
Yeah.
So
absolutely.
And one last thing I will ask you before you get into the beautiful diagram. I think it's great it's great for scientists because we love flowcharts. And for those who may not know, I was in science before I came to law. So this is like, scientists, we have pathways all the time. So we will love that. And I think, and system engineers like this kind of stuff too, right? So I think, it's very technical. But the question I had was, for as far as like you're in life science industry, but are there like in your company alone, are there other teams that are working with other industries? That they could just go over? Because I just want to make sure that people who are watching this understand this is not just life science industry, that if you're in like tech industry or some other clean energy, there are, agents or brokers that are in those industry areas.
Right. Yeah, absolutely. So we have, you know, as I briefly alluded to, different siloed teams that all those teams do is focus on certain industries so that they can, you know, essentially speak your language, and they know what coverages you need, you know, throughout the life cycle of the company. So yes, we have a tech team. You know, we have a technology practice, which is actually joined with the life science practice. And then, you know, we have clean tech is within that. We have a multitude of clients in both industries. And yes, for instance, if someone, you know, it's not going to be completely applicable, but if someone's in the real estate industry or looking for, you know, construction, builder's risk, a wrap policy, right? So the real point I'm trying to drive here is that if you have any needs from an insurance perspective, we have experts, if not myself, that can help you out with those placements. You know, and I know this is kind of tailored maybe toward the smaller companies, but really about, you know, 50% of the insurance program, whether you're construction or you're life science, is going to be the same from the inception of your insurance program. And then as you continue to, you know, have your projects, or you have your, you know, your funding from that perspective, there's different insurances. But I can kind of talk to that. And tech is very much so overlapped here, just until you get to the clinical pieces. But I can kind of give a little bit of both of the flavors.
Thank you. Yeah, let's go through your diagram.
Cool. Alrighty. Yeah. So I'm going to use my, can you see my mouse or no?
Yes, I can.
Okay, cool. Okay, great. So we're going to start here, right? So at company inception. So obviously this is when you're starting your company, you formed it and you're saying, hey, here we go. I'm going to move into this lease, or, hey, I found a vendor, or, you know, here's an MSA I'm signing. Once again, maybe refer back to the video that we had just recorded to get more details on that. But what you're going to say is the first reason you purchase insurance, right? So if you don't have any contractual requirements and you don't have any workers, there's no reason to buy insurance really, because your operations are relatively minimal at this point. However, if you do see one of these, you're going to follow, of course, the green arrow. And here are the typical, you know, lease or contractual requirements. You have your general liability, your auto, and your umbrella. So I'll go through each of these very briefly, right? So general liability is a non-fault slip and fall third-party incident or accident. For instance, the scenario we use is if you're at a location, and this could even be your home, a location of work, and the FedEx man or woman is bringing you, you know, an assay or a piece for your diagnostic or your medical device that you're working on your R&D with, and they slip and fall and injure themselves. This was not your fault by any means. However, they were coming to your place of work, and essentially they could file a claim which would land under the general liability. So it's bodily injury or property damage that you or your team or your employees cause to a third party. This is 100% going to be on every single contract. Once again, I can't say every single one. 99.9 of every contract is going to have general liability. Moving on to the next, you'll see the automobile liability. And we hear this so many times is, we don't own any autos. Why? We don't need this coverage. And while that is true, and you may not own autos, this coverage is actually for hired and non-owned autos. And what that means is if you are driving, or any employees driving during working hours for working purposes, including going to pick up lunch for the team meeting that you're going to have, you know, at 1 o'clock, this coverage actually sits in excess. And I don't want to lose you all here, but of your personal insurance. So I hate using morbid examples, but if you were to be involved in a relatively large accident and the liability and the damage was significant enough to cause your personal insurance to not be able to fully indemnify or pay back that third party, the attorney or the plaintiff is going to start asking questions. Soon they'll find out that you were driving for work. they would then try to bring in your company to the lawsuit to pay for excess damages. This policy would provide coverage over and above that insurance or your personal insurance. So it's for your employees, it's for yourselves driving your own vehicles. It also would include your rental in the United States, not internationally, your rental vehicles. So when you go to Hertz or Avis and you rent a vehicle for work, you can bypass the insurance, as this would provide your coverage.
So I like what you just said. I wanted to bring back in our other video we did for anybody who's trying to figure out what he meant by indemnity. That's why we did a separate video, because that's in your contracts and that's super important. So, you know, that's how you, like, these things get tied in. So if you are curious, it's linked below on this video.
Yep, absolutely. So the umbrella liability is going to sit over three coverages. It's going to sit over your general liability, it's going to sit over your auto liability or your hired non-owned auto, and it's also going to sit over side B of the workers' compensation, which is your employer's liability. And I'll get to that in a moment. So here's where we're going to sit until we get to this next inflection point in our business growth, which is hiring employees. If you don't hire employees and you don't have any 1099 independent contractors, you don't need to go any further. You're good to stay right where you are, right? And you're in this R&D only phase. However, when you do get to the point where you are hiring employees, or you have independent contractors that do not purchase their own insurance, you need to look into a state mandated, it's the only state mandated coverage, workers' compensation coverage. So workers' compensation is going to be statutory in terms of limit. Statutory means you do not have a capped limit on how much this policy will pay out for employees' injuries during operation or direction of you and the company or the entity. So someone's to burn themselves on a chemical and they were to go into the hospital, they would file for workers' compensation coverage. That would then come out of the policy that you purchase, and those damages to get that individual, those medical bills to get that individual back to the state they were prior to the injury are going to be covered. However, as I mentioned, side B, and it's not on here, is employer's liability, which the umbrella would sit over. And the umbrella is essentially just extending the limits that it sits over, right? So instead of 1 million, for instance, of general liability, if you had also a 1 million umbrella liability policy, you would technically have $2 million of general liability coverage. It's just an extension of the underlying policies. So going back to the workers' compensation, you have side A, which is the statutory limit, which is unlimited for those medical expenses. And you have side B, which is your employer's liability. So your employer's liability is protection, and it is a capped limit. It's at $1 million. That's California state mandated limit. And the employer's liability provides protection for the employers, the executive team, for any alleged, keeping of an unsafe work environment, for instance. So if an employee slips and falls at work and you didn't have, the caution sign up, and they say, you know what, I'm injured, I'm filing a work comp claim, but I'm also going to file a claim against my employers for maintaining an unsafe work environment. That is going to be also covered in your workers' compensation policy for defense costs. But like I said, the umbrella would then sit over that coverage side B, and you'd have $2 million if the umbrella was 1. So I know that's a lot. So workers' compensation is a little bit more in depth, and I can answer any questions, of course, after this, but for sake of not making anyone fall asleep, we'll move on.
Yeah, I think I will just add that,
Yeah.
When you have a business, you are required to have certain, like, California postings that give, notice to your employees or contractors what their rights are. And those also list the compensation requirements sometimes. And, if you've seen those posters in your workplaces, you've seen those. So that's what, from the insurance side, Brendan is covering what is in there as an employer, what you should have. So
right.
Because for you to put up that in notices, you have to have the coverage too. So he's like bringing that together.
Yeah, absolutely. So, and then we'll get to, and this is in the state of California, the most litigious, I would say, as well as the most frequent claim we see, especially, given the current pandemic situation, which is employment practices liability. So the employment practices liability can be broken down into three buckets: sexual harassment, wrongful termination, or discrimination. And this is alleged, of course. If to lay someone off or to fire someone and back and feel as if it wasn't for the correct reasons, or you fire them incorrectly, this is the policy that's really going to cover you for your decisions that you make regarding employment. And so this policy is not a requirement of the state, but it like I said, it's something that needs to be looked at very, very thoroughly when you're starting to hire employees that maybe aren't friends, maybe aren't family, maybe aren't close friends, that in the instance of having to let them go, you may have some issue on your hands. So,
just keep in mind, I will add to interject here also. So I do intellectual property and business law, but I would like to add, because I know a lot of attorneys who does do employment law area, and it's a specialized area from employer side or employee side. Just keep in mind though, you have to keep, just because you have at will employment, which is what you have usually in California, doesn't mean you're not going to get sued. So
right.
As a company, you may want to think more broader. Just because you can't say, well, it was at will and I decided to terminate them. You do need to have sometimes reasons, and sometimes you do want to consult with the employment law attorney, or if you have the insurance, you could talk with the insurance broker to kind of make sure that you have covered that in case if somebody say, hey, you terminated me for age discrimination. Let's say right now you're COVID-19, anybody over certain age is at a higher risk, and when you're downsizing people, laying off people, you decide to downsize somebody who is on that age category, could potentially be a big issue, because you're not supposed to have employment discrimination laws are not bypassed just because of COVID. So you want to keep that in mind. So I'd say that, because you want to make sure it's good to have that kind of coverage. And also, like Brandon mentioned before, have and in our other video, we talked about this. You want to have a service providers are your partners. So you want to have discussions with them if you're at these points, if you're trying to do a layoff series, so if you're having an issue with one of the employees and there's reports that there might be a sexual harassment issue or something, you actually may want to talk to the company before you do the thing, just to make sure you have your what you need covered.
Right. Yeah, absolutely. And we always say, make sure though that you're buying the insurance before the house fire, right? Or you're at least looking into it and doing your due diligence from a cost versus exposure perspective. Once again, when you first start out and you co-founder, the employment practices liability is very slim, but after you grow your team and really scale, this is a very pertinent coverage that we highly advise into your commercial insurance policy portfolio. So, and you mentioned a great point, right? Is as long as you are seen as a vendor, and I'm going to use this here to show you, but right in this box here where you kind of see the R&D only, this is really where we are seen the vendor. Because look, what have we provided as in of expertise to this point? Really nothing. From a on paper perspective, these have just been required coverages. So this is when it starts to get, because from any company to, and I call it making this jump, right, from kind of the R&D phase to, hey, now we're gonna not only develop, but we're gonna deploy our product into the clinic. Or this could be, once again, I'm trying to get the tech in here, your product, and you're starting to ramp up and scale, right? And you're finding your warehouses or to store your product or inventory, and you're finding your manufacturers. Of course, that relates to clients as well. You're going to need some money, right? So a lot of times, unless you've sold successful companies before, you can't fund the company on your own. So you're going some institutional, some VC funding. And that's where we make the fun leap here. And you'll see the large green arrow go from, the company inception to VC funding. And then just before we can get to the product, to the clinical stage, there's a very necessary coverage called directors and officers liability. So this is for your board. It's structured to provide coverage for the decisions made by the board of directors, as well as the executive team on behalf of the company. So through the VC funding, right, you're going to be presenting. A lot of you are familiar with Morgan, right? You present 80 times in a week, and it's exhausting just to get your subscribed round. And once you do, you're going to have your first investor in say, hey, we want a board seat. That's going to be part of the terms, your term sheet. And in order to do that, they want protection for themselves to make decisions on behalf of the company. So they say, show us your directors and officers liability. Your answer should always be, we haven't purchased that yet. We haven't done any VC funding to date, and we're being, conscious with our fund or with what we do have. However, we've spoken to our broker and we're ready to get that moving as soon as you are. That's the best answer you can ever give them, because they see you're financially responsible and you've already teed up the insurance, anticipating that you're going to need it. So through your pitch decks, right, and this is across any company, you're representing something. You're saying, hey, this is who we are. This is what we do. This is what we're going to do. With your money, we will get here. So, it's never a good look for a VC to sue their portfolio company. But in the event that you misappropriate funds and they need to get their money back, this is what the coverage is for. It's for alleged financial mismanagement or overall mismanagement of the company. Or of course, this is negligence, right? And that's really where this falls, and ultimately where the insurance starts becoming a little bit more expensive. And when I say a little bit, a lot more expensive compared to your initial insurances you're purchasing, as this policy is written on the assets of the company and the balance sheet and the strength thereof. So the more money that you have in the bank or the less money you have in the bank, the more premium ultimately, because really this policy is written based upon the strength and the coverage that they're providing is your balance sheet, is the lifeblood of the company, really. So that's the directors and officers liability. It's likely in your term sheet, and if it's not, it's likely required by one of your board members. I was just on the phone with a company earlier this morning, and they asked, hey, what limit should we be buying? And really it's an art. It's not a science for these limits, but it's typically a requirement of one of, maybe a seasoned board member who says, I'm not sitting on your board. I'm not advising until I see 2 million, 3 million, 5 million of coverage. Because ultimately, right, if things do go south, this coverage is also for your directors and officers and your executive team for their personal assets. And feel free to chat with me.
I wanted to ask you the question about that, Brandon. Actually, that's good. You picked up on. I had a question. So if you're going to sit on a board from the other side, let's say this is not the company side, you are being asked to be a director. Can you come to you saying, hey, this company reached out to me to be on their board. I'm really thinking about it. I really like this company, what they're doing. Can you, as a director, buy your own insurance from you guys for like a life science company that they're going to sit on the board just because they're a little worried about maybe they don't have this coverage and they are kind of worried because they have other, they have their own business or something else that they don't want to bring that liability?
Yeah, a great question, great point of discussion ultimately, right? And we could go on for a long time about this, but I think, to maybe just hit it on the head is can, but, and this happens all the time. We get reached out to by individual board members who say, hey, look, like we've used you for years. We're starting to sit on the board of this early stage company, and not that we trust the brokerage, but your team is very well versed in directors liability as well as insurance as a whole. So they'll come to us. You can't purchase your own directors and officers liability, but you could, of course, have us or your broker who's science or directors and officers liability focused take a look at what the current policy is, because a lot of times, brokers who do a lot of this coverage have certain negotiated coverages that are extensions of policies to ensure that coverage is as robust and as wide, and the ambiguous language, which could potentially lead to a not covered claim, is removed, because we have in-house coverage lawyers that all they do is review these policies we're placing to make sure that ambiguous language is removed, and any coverage extensions are automatically provided under all the quotes that we receive. So once again, not to get too much in the weeds or woods, but even if we're not working with a company directly, we're able to provide assistance and help. If things do look a little free, we can and place a program which you could be comfortable with.
Thank you. I think that's an important point, because I think we also see the shift in, like California has a law that came out last year or year before that says every public company, I think it's every company in California,
a woman on the
have,
board. Yep.
So I think, there's programs that are going on where there's get ready to be on a board, but I think the other question is for people who may not have sit in a board because they may not have the opportunity. Now that you're thinking about stepping onto a board, it's really important to know where the liability shift and where to ask for that information.
Right.
Ask the company for that information. Make sure you chat with somebody like Brandon to see if that what their coverage they're saying they have is actually what you were saying.
Right.
It's actually proper coverage, because I think when you're a startup company, sometimes, like you said, you buy your policy and you put it aside until it's renewal time, and you're not thinking about everything. So,
Right.
It might be at certain points you do need to get that reviewed and updated and bring up the standard that will work for everybody. So.
Right. Yeah, absolutely. And I know you alluded to the public directors and officers liability, and that's a whole different monster and animal at this point. But we'll get at kind of the bottom here of this.
Oh, yeah, on the bottom of there.
Yeah. And of course an IPO is some companies now recently are going public prior to any clinical activity, and some are going phase 3, phase 2. So I don't want this timeline to necessarily be, or this roadmap to necessarily be the only way, of course, but it's just structured to essentially be through phase 3 of a clinical study, pushing technology through the pipeline. So now we have some money, right? And I know you need a lot of it in the life science realm. Sometimes hundreds of millions of dollars, right, to get your product fully through the clinic. So here we get the funding and we go to the clinic. We do the IND, we get the approval, and we're going to start our clinical or clinical development. But if you have a medical device, right, you're either going through the 510K or you're doing some basic testing, which sometimes is seen and required as such as a clinical study, but a lot of times it isn't as well. So once again, there's certain insurances such as the product liability at this point that you would need to look into purchasing. When you are kind of gearing up for your phase 1 clinical study, you will be either going through a hospital or a CRO typically, right, or you're sponsoring your own, but or you're always going to sponsor the trial, or you're I guess driving your own clinical study, which typically doesn't happen. But if it does, you still of course need to purchase the product liability. However, the hospital and the CRO are going to have, once again, going back to the contracts, product liability requirements within them. So are we conducting clinical trials? Yes. If not, do we have sales at that point, right? The medical device, anytime you have $1 worth of sales, whether that be from research agreements that you have from other outside parties that they are paying you to conduct research, you would need to purchase product liability as well as potentially errors and omissions or professional liability. But let's just go back to kind of the clinical piece, right? Are we conducting trials? Yes, we're going to need to look at the product completed operations, clinical trials insurance. What that covers is any serious adverse effect, alleged bodily injury, or physical damage, property damage as well, that your product could cause to a third party, right? And so, that's really, once again, the directors and officers, the product liability piece is where you're going to start seeing your broker talk your language and really guide you through these policies and the ins and outs through that partnership, as well as with the carrier. So you have to be with a carrier who understands the coverage as well and is well versed in their underwriting ability for low hazard, medium hazard, or high hazard products. And COVID, right, is one of them. We have tons of clients right now who are investigating some technology and on the COVID side, as well as some kits, right? So the kits are sales, they're not clinical studies, and so you have to buy product liability, but a lot of the clinical pieces are buying the products right now for their clinical studies, and it's something that's new, but the underwriters are adapting quickly, right? And it helps just to have, once again, someone who knows the industry.
And I would add here that, going back to our contract piece, you mentioned this in here, that having those alignment in your contracts with your insurance, because what we are looking at is, if you have a CRO agreement, which is a clinical research organization, is doing your research studies, so collecting the data, or like you have a master service agreement, which is, we call the MSA, those things have to have their language in there about the indemnity, again, come back to these coverages. So you want to make sure that you are properly having balance in the who's liable for what reasons, and that is you're working with the insurance broker to make sure that it's in alignment with the insurance you have. Because if you just sign off on things that might have like a weighted indemnity toward you, or to off shift the indemnity, that might get you in trouble with your insurance, that they may not be able to cover you. So this is where it's really important to know what's in your contracts.
Right. Yeah, absolutely. And once again, you can go back to that other video, but it's our job as your broker, as your extension of the team, to review all that for you and ensure that you are in compliance. That should be your job, right? The last one is for you to be in breach of contract because you don't have certain language or certain limits met, right? And so when you ink the bottom of that agreement, we want to make sure that you're signing a document that is completely accurate. Another piece is the product liability is going to be rated in terms of the premium, is going to be rated on your enrolled patients. So the more patients you enroll, the more premium. And of course, if your product's a high hazard, which COVID right now is being underwritten immediately as a high hazard, you're gonna have to end up paying some more premium. So the D&O and the product liability are going to be really the weight of your premiums. And when you continue to kind of ramp up here. So another piece which isn't located on here, but it's going to be what I refer to, and this goes across all industries, is logistical supply chain coverage. So you have your cargo, you have your transit, and then you have your stock coverage, right? Where in a lot of times when you have multiple manufacturers and then multiple clinical sites that you're deploying your product to, you're going to have off-site locations that your product's being stored at. And a lot of times your product, if not all the time, right, is temperature sensitive. It has the ability to spoil. And so once again, there are policies you can obtain that don't cover the spoilage or the temperature drop. If a refrigerator is to malfunction, or the power's to go out and they don't have any backup generators, you're going to be out a significant, not only from a balance sheet perspective, that your product, but also from a timeline perspective. And everyone knows, right, when you get to the clinic, a day is $100,000, if not more, right, of time that you're wasting. And a week, I mean, it can get up into the millions in certain instances, right? So, to have that chink in the supply chain is paramount that you cover it. And so you need to, once again, partner with brokers who work with carriers who underwrite specific life science and for your logistical chain from manufacturing, as we call, from A to Z, whether that be multiple warehouses in between, you're going to be liable. And once again, if you have warehouses, you're likely going to have another contract and they're going to hold you harmless, and you're going to be liable for your property, even though it's at their warehouse and you have no control over it. If there's a fire, then your property's on you to cover.
I think that's this really important point. And if you're watching this, you're not in life science, that applies to, so I work with some like other industries, like, like wine, beer, those kind of, and we were just talking about coffee. Now, if your product is like a coffee and it's getting shipped around, from different warehouses, and they're storing it, and you have a warehouse where they don't have any liability for the temperatures or foliage of your, like coffee storage is very tricky, right? There's a quality to what you're providing. So if you, the temperatures were not in control or something goes off, who's liable? If you sign up and you have insurance coverage, but you have a warehouse, you had an agreement with, where they say they are not liable for even their, if something they did, one of their employees did negligently, then is your insurance going to be able to step in? Maybe not, because you already told them like they should be liable for their employees' stuff that they could control. So I think that's where it's really important. Whichever your industries you're in, you want to talk with the insurance brokers and also have these contract language that you're, signing up to be in alignment. So.
Yeah, absolutely. Great point. And yeah, way to relate it. I mean, it's true with, tech products, semiconductors, right? You're moving them around.
Exactly.
Being stored sometimes in locations that you're not necessarily aware of. And so you need to make sure that, you have the coverage for that. So yeah. Well, and then maybe jumping back quickly to kind of wrap up the diagram. And I mean, we could go for hours on public.
I know. I think we should just finish like the diagram.
Yeah, no. Yeah, we'll get it done. But so some companies could stay, as a deployed product. You go to commercialization, and you just simply have the sold product exclusion removed on your product policy, and you continue from there to build funding, and you could stay there, right? Technically, for the life of the company, or forever, and you don't have to IPO, and you don't have to sell. And so at that point, you're looking for your broker to then advise on their benchmark data to increase your limits as they may seem fit, right? Because there's going to be a certain point where your assets and your exposure is going to outgrow your contractual requirements. So you're going to want to start taking on more insurance for your balance sheet protection, not just to check boxes, right? So you're going to say, hey, we want to know what a $200 million revenue company that's selling spine implants, how much product liability they purchase, 25 million, 40 million, whatever it is, right? And so that's where you'll stay. And then from there forward, it'll be more of an art and kind of the science backed behind the benchmarking. And that's really where we become, right, the in-house risk manager. But in the crazy event and the exciting event that you either, are acquired, or you go through, an IPO and uplisting to the NASDAQ or the New York Stock Exchange, or even the OTC, you're going to have a whole nother world of insurance, public D&O, then your private policy is no good anymore. You would transition it to a public policy, and the insurance expense is extraordinary. We don't have to get into it right now, but just ensure that you're engaging your broker at least 8 to 10 months prior to, because once the S1 is going to go on file, you're already behind. So that's what the broker uses to approach the market, the whole entire carrier market that's interested, to get quotes and to build towers of limits that they can present to you. And then an exit, you're essentially gonna be acquired. You would run your directors and officers liability as well as your product liability into what we call tail coverage. And it's funny because tail coverage is kind of opposite. We like to refer to it almost as nose coverage, because nose is forward, tail's behind. But this coverage is essentially going to provide coverage for you in the next coming years, whether it be a 3-year term, a 5-year term, a 10-year term, or an unlimited term, for litigation or for claims that have not yet come up, but that may after the acquisition, alleging a date prior to, or prior to the acquisition, right? So they're saying, hey, I was part of the clinical study and then you sold. Well, I didn't know that I was going to have asthma from your drug until 3 years later. And so now I'm filing a claim and it's 3 years later. Well, your company doesn't exist anymore. It's been acquired. Well, this is what that tail coverage would be built to cover, right? Including decisions made by the board. And a lot of times, if you're selling for less shareholder value, mostly on the public side, but that's an exposure. They say, hey, you didn't sell for enough. I didn't make enough money on the acquisition. I'm upset and here's the money that I'm out and I'm coming after you. So hopefully I didn't put you all to sleep. That's kind of it. There's other coverages such as cyber, right, to protect your data, your systems, your servers from third-party hacks. You have different ancillary coverages on the executive liability, such as crime, kidnap and ransom. We talked about employment practices liability, fiduciary. If you deploy a benefits or a 401k program, the administrator of that, you want to be protected for what program you're signing off on. There's coverage for that, right? But that's pretty much it in a nutshell. I mean, once you get to those, once you purchase all the insurances, right, it's like I said, it's really you grow up. But you use your broker to everything that you can, and always ask questions. I'd rather have someone who asks too many questions and keeps me arm's distance, and we see them again at the end of renewal, and all of a sudden we find out that they have two products in the clinic and they're not insured, right? So, and that's just an example. I don't think that's ever happened, but
no, I get it. I think it's really important to have that open relationship and discussions, periodically have a chat, because you as a broker don't have time to always check in with the companies, and they should, as the business owner, you should be the one that kind of have that on your list of things to periodically check where you are, if you have the coverage. So that's always a good practice, and always a good practice to have. If your current broker is not available or not giving you enough attention, there we go, call Brandon. So because the thing is, end of the day, I think it's always important. Your service providers are your partners in businesses. So I tell this to clients, because for instance, I am an attorney, I do intellectual property and business law, but I don't do tax law. So I always tell my clients who have tax questions, you have to have a good accountant for business. And if your accountant is dismissive, or if your accountant is not getting back to you about the questions you have, you need to find a better accountant. Because the thing is, these are really important things. All of these services are what could make you or break you in your success as a business. And a lot of times when something doesn't go right, you could see where the pitfalls were, because you don't want it to snowball into a giant issue. So if you're keeping in contact with your attorney, your insurance brokers, your accountants, all of these service providers that are essential for your business, you're more likely to capture things and make sure that you could pivot around problems too.
Right. And maybe one thing I'll add, and just from doing this, 5.5 years, I've created, such as yourself, right, such great relationships in the industry. That know, the service providers across the board, across the gamut, right? From commercial real estate brokers to tax and audit to, lawyers, attorneys, right? I mean, we try to urge people to Google, right? Because that's the worst, is when you're Googling, as opposed to, hey, I know I do insurance and that's my job, but if you had asked me, hey, I'm looking for space, and I need someone who knows wet lab, and I need someone who has a good handle on the market, and I would have someone introduce you to, just as we both would, right? And so I think stop trying to do sorry for demanding, stop trying to do too much outside of run your company and further your technology, right? Because that's our job, connect you with people who can help you, because we have trusted partners as well, that I would refer any of my clients to. So
I mean, I think that's the key, right? It's important to know that because, yeah, because Googling can, there could be like somebody who wrote a really nice description about this business, but
Right.
it may
Right.
not be how they service it. Like when you go to connect with the business, they may not, you know, they're not the exact right partner for you. So if you already have a business people that you like, it's always good to check with them first to see if they have a source they you could connect with. And of course, I also tell this to people: if I put you in touch with a professional and they mistreat you somehow, I want to know that too. Go back to the person and say, hey Brandon, that person you send
Yeah.
it to,
Yeah.
kind of rude to me. They didn't send this thing, because it's kind of like, because we as service providers, we connect with a lot of professionals, but sometimes we are not actually using the services themselves. We know them from a
Right.
business perspective, right? So you know, I always like to have that two-way discussion, just because I would like to know. And if I hear that, I will take that person with a grain of salt to make sure, like, I keep an eye out or take them out of that rotation of people I recommend, right?
Yeah.
Depending
Yeah.
on the situation. So, and with
Absolutely.
Google, of course, what the other challenge is sometimes, you know, with the reviews, for instance, there's challenges, like especially for attorneys, because there's attorney-client privilege issues too. Um, Google like ratings not necessarily going to reflect sometimes a business, because you may have somebody who's really pissed off about something. They write a really bad review, and there's like 10 other clients who did you really like, they really like you, but they haven't wrote anything because, you know. And as attorneys, like, I find it is hard to ask a client to do a review for you, because there's attorney-client privilege and confidentiality involved. So, like, depending on the industry, like, I think that these, you want to keep that in mind too when you're using these kind of, you know, like online services without having a just giving you a frame of reference there. So, Brandon, thank you so much for walking us through this. I think your video froze for a second. Hopefully you're still there. If not, if you don't come back on, I will just close up this video for everybody who joined us for this kind of a long discussion, but I think it's necessary to have this whole long discussion. So I think we did lose Brandon. That's okay. I thank you for joining me and Brandon for this discussion. And if you like this video, please like, share, subscribe, and check out my other videos. Thank you and bye.